Welcome back. Now, the global mining sector is back in focus after Rio Tinto and Glencore confirmed early-stage talks over a potential mega merger. If successful, the deal would create the world's largest listed miner, with copper firmly at the center of the strategic rationale as demand accelerates from the energy transition. Markets have reacted cautiously, welcoming the scale but questioning valuation, regulation and the future of coal assets. Afriforesight's Vinesh Chetty joins us now to unpack what's driving these talks and what it could mean for the industry. Vinesh, thanks so much for your time this evening. Perhaps Rio Tinto will be lucky second time around. Of course, those talks with Glencore initially collapsed in late 2024. Maybe let's start there, right? Why did those talks collapse and what's different this time around?
Well, I think, as you've seen, there's certainly a large consolidation around copper. What's different now, I think, is that the world is seeing that there aren't a lot of reserves left. As we've seen with Anglo Tech, there's only so much copper left in the world, and the companies who have it may need to merge. And as you've talked about, rising demand. Electrification is significant. Copper prices are incredibly high at the moment. So yeah, lots and lots of money to be made in the copper space, certainly.
Lots of money to be made, but of course these copper projects are very capital intensive, and I'm just worried about that and whether we are seeing consolidation on the back of that as well. So instead of one balance sheet handling those expenses, we have two.
Yeah, so this is certainly a big part of it. Copper mines tend to be incredibly capital intensive, as you've said. They're also physically very large assets. So if you have two properties that are close to each other, you can get lots of economies of scale by using them together. But also, as you're saying, just two balance sheets, having access to more capital, more investors can certainly help, because these copper projects, very expensive and also long term.
Yes.
So again, more capital certainly helps to get these projects over the line.
With that being said, do you expect to see more consolidation in the industry? You did touch on that Anglo Tech deal at the top.
It does seem to be the way we're going. Bigger miners, larger, access to more capital. And also what we've seen is that certain investors don't want to hold certain assets. So previously, where we've seen a lot of miners sell out of things like coal, we are seeing things like copper and certainly these new industrial metals, new energy metals, lots of demand there. So if you've got miners who have those metals, we could see more consolidation in that part of the market.
And that's a great segue into my next question, because I want to talk about Glencore's coal assets. Of course, there's been talk around that and the potential of those operations being spun off. How likely is that?
I think this is going to be a big part of the valuation you talked about at the beginning, because while there's a lot of money in copper and Rio Tinto's got a lot of iron ore assets, Glencore's coal assets may be an issue or may affect that valuation. Rio Tinto sold out of its coal assets, whereas Glencore still owns coal mines in Australia and South Africa and recently bought coal mines in Canada. So there'll be a question of, are Rio Tinto investors willing to have those coal assets? And if not, is it going to be a spin-off, which again, Glencore has been willing to do. They previously looked at that option when they were looking at a tech merger.
Just on the issue around those coal assets, particularly the ones that are based in South Africa, what could a spin-off then mean for SA? As mentioned, Glencore has those operations here at home. They also have that ferrochrome JV with Merafe. That unit also grappling with high electricity costs and cheap imports. We've talked about this before. 100 jobs were on the line, but it does seem that there has been some agreement with Eskom and government. But, you know, it still hangs in the balance. No solution has been found. And I wonder how that then also affects valuations when it comes to these merger talks, and how that affects SA as a mining investment destination.
So there certainly are concerns. We've seen that often mining investors are more willing to put money into Australian, Canadian companies and the like. Glencore's coal mines in South Africa, still operational, still one of the big miners in the country. Perhaps we could look at something like a Thungela, where a spin-off for the most part means a new name, more South African shareholders, fewer international shareholders, but for the most part still mining the same mines. The issue around valuation, though, is that Glencore has said that they are constrained. They can't mine as much coal in South Africa as they would like because of rail and port issues. Those are getting better, but Glencore is still performing less than they would like to from their coal mines in South Africa.
You know, I ask because it does seem like South Africa seems less attractive as a mining investment destination. As you mentioned there, miners are preferring to invest in Canadian assets as well as Australian assets. Not too long ago, we had that BHP bid for Anglo, where it wanted Anglo to spin off its SAS assets.
Yes, unfortunately, a lot of international investors and big fund managers see South Africa as a more risky destination. And for certain assets, they exist in other places as well. Australia, Canada have access to a lot of minerals. So if it's not PGMs or chrome or manganese, it's for the most part available elsewhere. And that's why we could see investors say, we don't want South African coal mines. We'd rather mine that coal in Australia or Canada, unfortunately. So that does put South African coal mines at the back of the queue.
And just before I let you go, I want us to talk about BHP, right? Where do these merger talks, the consolidation in the industry, leave BHP? Just looking at the current M&A landscape, we spoke about that we're probably going to see more consolidation in the industry. What options does BHP have, considering that, you know, it lost out on that Anglo bid as well? Are we likely going to see BHP perhaps pick up some of the smaller copper assets?
I'm sure they certainly would be out there scouting for some smaller ones. It is a shrinking landscape. You know, Anglo and Teck are just about done if Rio and Glencore get there. As far as copper assets, there are fewer and fewer. There are companies out there like Freeport-McMoRan that exist, but there is less of a space for BHP to go out and get those copper assets.
All right, Vinesh, thanks so much for your time and just taking us through the M&A activity action in the mining sector. That was Vinesh Chetty, Head of Research at Afriforesight.